You've heard it in many of my videos, but you've never heard me explain how I actually gain an 18% APY return. Here's a different way of investing your money so you can diversify your investment, and it's called peer-to-peer lending. So in today's video, we're gonna get right into that. So I want to walk you guys through exactly what I do on Prosper, and I'm going to throw up screenshots on here so you guys can see exactly what I'm looking at. So I use prosper.com, and what I look for are these criterias. There's a lot of listings you can buy. There's AA listings, A, B, C, D, E's, and HRs. HRs are the lowest, which are high risk, and AA's are the safest. And let's just pull some up so you guys can see exactly what I'm talking about. Okay, so we see AA, B, HR, and we see the ratings, we see exactly how much they want to borrow and the yields they're going to pay. The higher the rating, the less yield that you get paid. So in my opinion, it's not worth it to go for AA's that are super safe but pay like 6% yield. You're still taking on a risk. The bank, ally.com, pays 2% for your online savings now. Just to make 4% more but still having a risk of someone default is not worth it. But at the same time, you don't want to just be doing HRs and having everybody default on you and lose all your money. So if we look at this AA, the first one, we can see it's 29% funded. There's $7,000 left in the loan. He wants to borrow 10 grand. Let's look at their credit profile. Here we can see their rating, their Prosper score, which is an 11, their FICO, which is between 760 and 779, which is good, but considering the highest rating, I would assume a higher credit score, but can't be too picky. No delinquencies that are current. No public records in the last 24 months or 10 years. No delinquencies in the last 7 years. No inquiries in the last 6 months. Started this credit line in December 2013, so like 5 years now. Has 5 credit lines, revolving credit balance of 5 grand, 20% utilization. Okay, that's all sounds good. Employed, length of status 3 years 7 months, makes between 750 and 100K. Occupation, skilled labor. Now that's what I don't like, when they don't specify exactly what they do. Generally, I will just skip that. Like, if you're not gonna write exactly what you do to make money, I'm not gonna lend you any money. Now let's look at the HR loan. You want $7,500, you'll get a 30% yield. There's 6,889 left, yada yada. Credit profile, FICO 700 to 719, no delinquencies, 1 inquiry in the last 6 months, credit line since August 2003, I like that, that's a longer credit history, 29 credit lines, okay, revolving credit 33K, 96% utilization, this is scary. Debt to income ratio of 41%, employed for 3 years, makes over 100K. Again, occupation, other, really? Like, you're not gonna tell me what you do? Whatever. Next, let me give you guys a good example of what I would actually buy. So I've created these filters that will automatically find deals for me. I set my criteria at exactly what I want, and if it hits that, it'll automatically spend $25 buying that loan. It'll keep reinvesting for me. So I never have spare cash laying around. It's always reinvesting in itself. I mean, I haven't opened this in over a year, and actually my return is at 16 point something percent. Let's open it. Let me show you guys exactly my return. What's this? Dude, why is my laptop? I'll put a screenshot here of the return I've been making, the exact percentage currently, because it does fluctuate. And I'll throw a screenshot of all the filters I have and the filter that I'm recurring with, and we'll go over the criteria in it right now. Okay, so I'm gonna go over the exact filter I use to pick out my loans. Now this automatically buys loans for me, and this is what I do. You don't have to do this, but you can copy me if you want. However, I'm not a financial advisor, etc., etc. Read the legal disclaimer. So I'm gonna show you guys my secret sauce here. That just means I'm probably gonna have more competitors, but whatever. This filter is hardcore. It just picks out the best deals in my opinion, and if you try to search for a deal through the filter normally, it'll say no results shown. That's because whenever there's a fresh new deal, my cash and filter jumps right on it as soon as possible. I'm sure there's a lot of people out there competing. There's a lot of loans out there right now that you can just purchase, but those are average loans. You want the best deal. You want the highest return with the lowest amount of risk, but you still want to take on some risk so you make some money, right? So enough of me blabbering. Let me get right into exactly what my filter has. So for the ratings, I only go for C levels and higher. I'm trying to take on risk here. I'm not trying to gain a small percentage. And I think they've changed it. There used to be like a percentage that you can aim for, but they removed that filter. So anyway, term, I go for 3 to 5 years. Doesn't matter. I'm in it for the long game. So if you want your money within 3 years though, just put the 3-year check mark and don't make it recur. But I'm recurring this and I'm letting it grow forever on the side. I don't even have to think about this. My categories are debt consolidation, home improvement, auto, medical and dental, and other. Now I know I said I hate other, but sometimes there are super deals that have the other as far as their loan loan category. Because if they fit everything else that I want and it says other, fine, I'll take it. Gotta put a little bit of flexibility in there because I can make this filter way too strict where it'll take forever for me to find any deals. Now for the loan amount, I stick anywhere between 2 grand and 15 grand because the lower amount of money that's being borrowed, the more likely the borrower is gonna pay it off. When it's a higher amount, they are more likely to default on it. For the credit data, I make sure there's no delinquencies at all for any time period within the past 7-10 years. And I also make sure there's no inquiries in the last 6 months. For employment, I make sure they are employed. I don't look for self-employed because an entrepreneur is a lot more risky, right? 90% of businesses fail, right? So I wouldn't want to risk that. And I'm looking for a minimum of 3 years employment. As far as income goes, I look for 50 grand a year and up. Since I'm only taking on smaller loans between 2 and 15 grand, someone making 50,000 a year or more is more likely to be able to pay that off. And they've been working at their job for 3 years plus, they have a high chance of paying it off. So let's go over some of the notes I actually own at the current moment. Here's a screenshot of all these notes I have. I'm not gonna go over all of them because that would take forever. They're each just $25. But just looking at the first page, you can see they're D, E, D, C, D, E, E's. They're all in my criteria. Look at the yields that they're paying, 21%, 26, 26, 24, 20%. 20% and up is what I'm looking for. They're all current, luckily. If you look at the bottom, that guy's late. He's 15 days late, but he's paid $8.98 so far. He's at 25%. His loan was for $12,000 at 26%. Who knows if he's gonna keep paying or it's gonna get charged off. I know when they become late, collections goes and starts hassling them, but that doesn't guarantee anything, right? You can't hassle them yourself. You can't just knock on his door and say, hey, give me my money, with the mafia behind you and all these baseball bats. You can't be doing that, right? So let's open his up. Let's look further in, like why isn't he paying me? If we open it up, you can see, okay, $12,000, $25. He made payments from February 19th, 2018. He's been paying $1.02 consistently. Looks like around October, he's failed again October 24th. Then he made a manual payment October 29th to make it up, so that's a good sign. And then now November 19th, he's failed, and then November 21st, he failed again. So hopefully he does another manual payment and makes up for it, but if not, then I guess it's gonna just go to zero. But do I care? No. Why? Because I only put $25 in, right? I only put 25 in. That's why you want to diversify. So if he doesn't pay, a collection agency will be after him, and that'll be the end of that. Hopefully he does, whatever. If he doesn't, it doesn't matter. I have had a lot of people not pay back, but I've had a lot more people pay their loans off. Overall, I'm up 16.92% at the current moment. So for me, I'll take that any day. And this is just a good way to diversify my portfolio. If there's anything I missed, any questions you have, any details you want to know, comment down below. I'm here to help you. If you enjoyed this video, leave a like. It really helps me out. It makes me make more videos like this and lets me know what you guys actually enjoy watching. And share this with someone else who's never heard of peer-to-peer lending. And subscribe for more videos if you want to see more videos like this. Until next time.